All right, today we're going to crack open one of those things that can feel, well, a little intimidating. A corporate earnings report. But here's the secret. They're not just boring documents. They're actually stories told with numbers. And we're going to learn how to read that story by digging into the latest one from residential solar company Spruce Power.
You know how it is. You see the headlines, maybe the stock price jumps or falls, but when you actually look at the report, do you ever just think, what on earth does any of this mean? Yeah, you're not alone. These things are packed with data, but hidden inside is a whole narrative about a company's health, its struggles, and where it's headed.
And that's exactly what we're going to do right now. Think of this as your personal decoder ring for financial reports. By the time we're done, you'll have a game plan you can use for pretty much any earnings report you come across. So let's get into it. Okay, so every earnings story pretty much starts the same way. I like to call it the victory lap. This is where the company rolls out the highlight reel, They put their best foot forward, shining a spotlight on the biggest wins to set a really positive tone from the get-go. And you really can't get a much clearer opening statement than this one from Spruce's CEO. When you see phrases like breakout year and exceptional momentum, they're basically grabbing you by the shoulders and saying, hey, listen up, we had an amazing year. So the first thing you want to do when you open a report is hunt for those big headline numbers. They give you that 30,000-foot view before you get lost in the details. And for Spruce, their full-year numbers tell a really powerful story.
Let's start with what they call the top line, which is just a fancy way of saying total revenue. Spruce's revenue for the year was up a whopping 36% compared to 2024. Right away, that tells us the company is growing fast. It's a huge green flag right out of the gate.
Okay, next up, profitability. This number here is called operating EBITDA. All you need to know is that it's a really good way to measure how profitable the company's core business is. And at $80.1 million, it's up 49% from last year. So, get this. They're not just making more money, they're getting way more profitable at doing it.
Now, this is where the story gets really dramatic. Take a look at this. This is operating income. In 2024, Spruce actually lost over $50 million. But in 2025, they completely flipped the script, swinging all the way to a nearly $18 million profit. I mean, that's not just growth, that is a fundamental turnaround for the company.
So a massive turnaround like that just begs the next question, right? How in the world did they pull that off? And that brings us to the next chapter of our story, the efficiency engine.
You see, really strong companies don't just focus on sales. They're absolutely relentless about managing their costs. It's this idea that as you get bigger, you should get more efficient. So let's see if that's what happened with Spruce.
And wow, this slide says it all. Just look at these cost cuts in the fourth quarter. Operations and maintenance slashed by 64%. General and admin expenses down 16%. The company actually had a name for this, Project Streamline. So this wasn't just random cost cutting. It was a deliberate plan to make every single dollar they earn that much more profitable.
Okay, so far the story is pretty straightforward. Huge growth, amazing efficiency, it almost sounds too good to be true. But every great story needs a little bit of drama, a plot twist. And in an earnings report, you'll often find that twist buried deep in the disclosures.
So as you're reading, you might stumble upon a phrase that just sets off alarm bells. And for Spruce, that phrase was going concern. This is the perfect example of why you can't just skim the headlines. You got to dig in to get the real story.
So what in the world does going concern mean? Well, basically, it's a formal warning from an auditor when they have serious doubts that a company can stay in business for the next year. On the surface, that sounds absolutely terrifying, especially after seeing all those fantastic numbers, right? But this is where the commentary in the report is just as crucial as the numbers themselves. The company gets right out in front of it. The CEO makes it crystal clear. This isn't about the business failing. He says it's a technicality triggered by accounting rules because of the timing of a financing deal.
And here's the solution to our mystery. It turns out Spruce made a strategic move. Instead of rushing a small financing deal, they chose to extend an existing one. Why? To buy themselves time to put together a much larger, better deal down the line. So while the accounting rules forced them to make that scary-sounding disclosure, the actual reason behind it was smart, not desperate.
All right, so we've seen the victory lap and we've navigated the plot twist. The final act in any good earnings report is all about the future. Where does the company go from here?
A good report will always lay out a clear plan. For Spruce, it's this three-point strategy you see right here. They're going to buy existing solar portfolios, they're going to partner up to create new ones, and they're going to grow their Spruce Pro platform. which is a really clever capital-light way to add revenue. The bottom line is, they're showing you they have a plan.
Okay, let's zoom out and put this all together. We've just walked through an entire earnings story from beginning to end, and the biggest lesson here is really about learning to read between the lines.
And if you take away only one thing today, let it be this. The numbers, they're the skeleton. They tell you what happened. But it's the management's commentary, the quotes, the explanations, that tells you why it happened. You absolutely need both to get the full picture.
So let's recap our new decoding toolkit. 1. Start with the big, flashy headline numbers. 2. Dig a little deeper and look for efficiency. How are they managing their costs? 3. And this one is so important. Always read the fine print to find those plot twists. And finally, 4. Find the part of the story that lays out their plan for the future. You follow these 4 steps and you'll understand what any company is trying to tell you.
And that leaves us with the big question. Now that you have the tools, you can look ahead. Will Spruce actually get that big refinancing deal done? Will that 3-point growth plan work out? The answers will be right there in their next report. And this time, you'll know exactly how to read it.